Hello everyone, nobody is telling you the truth. Let's talk about China's export and trade surplus in the past January and February. The total export from the Chinese economy jumped not from 7% as most people predicted. It jumped 22% or almost 22%, and the trade surplus increased by 26%. These numbers are shocking. So what's going on? And what will be expected, and will this be sustainable? Let's talk about it. First, let's be clear. China combines the January and the February number of every year to compare with the 2 months of 1 year ago. Why? Because China has a tradition of this Lunar New Year, which sometimes happen in late January, sometimes in mid-February, okay? So the month of the Chinese New Year usually means slower economic activity. So combining the 2 months makes sense. So this year's January plus February export increased to the level of $656 billion US, a 21.8% increase over the same month of last year. Most people predicted 7.1% increase. This 21.8% is really shocking. There are two interesting and surprising details behind the boom of China's export. Number one is AI. Okay, China's import increased mostly in computer chips, and which is at the center of the infrastructure of AI. China's increase in AI chips increased by 73% over the 2 months of last year, and the volume only increased by around 13.7%, meaning that China is moving up in the value chain of computer chips. And this is not too surprising for insiders in China, because China has been pushing very hard in the production of and self-reliance of computer chip production. For most of the computer chips, except for the very high end, China is now the biggest producer. The second and very interesting fact behind the booming of China's export is that China is routing around the US. Exports to ASEAN countries jumped by 29.4%. To the EU grew by 27.8%. To Russia increased by 22.7%. To Africa, this is most interesting, surged by 49.9%, almost 50%. Meanwhile, China's export to the US fell by 11%. China's export to the US last year declined by almost 20%, and in the first 2 months of this year only declined by 11%, meaning that the tariff impact is already fading as China is diversifying. Well, the big question is this sustainable? Now, I would argue that yes, this will be sustainable and this will continue for a few years to come, okay? Why is that? Because the simple picture is clear, that China is now upgrading its technology. China is trying to diversify. China is trying to go around the USA. So these simple facts will be there. However, there will be one important countervailing force, that Chinese policymakers do not take the economy or export as a single target. China will have to balance various political factors. In particular, China will have to take into account potential complaints from the trading partners in Africa, in ASEAN countries, so on and so forth. So as a countervailing policy, China most likely will increase investment in Latin America, in ASEAN countries, in Africa, so on and so forth, to really balance the flow of trade, or flow of goods, and the flow of funds. And also, for a simple implication for investors, I strongly believe that this is a high probability that the RMB will appreciate against the US dollar and major currencies. Why? Because the RMB appreciation will become a market force to help the Chinese government to manage their surging trade. And also, this picture will continue for years to come.